Hey, what's up? It is Chris. Today, thanks. Big shout out to everybody who wished my bunny well. Much appreciated. He is feeling much better, which makes everybody much happier. Secondly, as we've all seen, gold hits the all-time high. What about silver? Is it going to do the same thing? Your guess is as good as mine, but I would bet it doesn't. Now, today, the big thing is obviously we see ups and downs with silver every time, silver and gold make a run up. Everybody trots out their tired reason why it's going to be different this time and it's going to continue to go higher. Could it happen? It could. Is it likely? Probably not. Again, when you look at other assets right now, Dow just hit, its all-time high. The S&P 500 and the NASDAQ are not far behind. So, this is the environment we're in. Assets are getting pushed up. Again, another thing that you probably didn't see was interest rates took a big hit last 2 weeks. That's important. It means that somebody's buying up the debt market, which is probably the Fed. But it's also important because it's going to catch a lot of people by surprise. Whether it's gold, silver, whatever other assets you have, watching those prices come back to where they were pre-2022 downturn. It's going to be a big move. And the thing is that once those things happen, let's say for example, the stock market, now I'm not talking technical analysis, but just when you watch the behavior of the markets over time, once the market gets back to all-time highs, it's basically completed that cycle. Does that mean it can't, go down back below the highs? No, absolutely not. But, basically that run is done and then we're on to the next. So when you think about what's gone on the last 2 years, so many people get lulled into this sense of like, oh, doom and gloom and everything's bad. And, Joe Biden, when the market was going up in 2021, which I think the S&P did like 25% for 2021. I didn't hear anybody complaining. It's only when they go down, then all of a sudden it's somebody's fault. But the interesting thing is, again, it's going to catch a lot of people by surprise because, again, many people listen to, all the narratives, the economy's bad and this and that, and blah, 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 inflation. No, as with anything, you got to tune out the noise. You got to stop relating things that just aren't, correlated. As they say, correlation is not causation. If the market was tied to, actual fundamentals, for example, the stock market, then 2022 should have been a record year for the market considering the corporate profits that were made. But it wasn't. Why? Because those things are disconnected. So moving forward, what's going to be the biggest driver? Like, what's really going to push things? Well, it's no surprise. Monetary policy. And again, when you really look at the environment that we're in, is actually looking very, very positive, very bullish, especially for the stock market. Well, why would that be? Well, first, I would expect that the economy does slow down at some point. Why? Because contrary to what you've heard, the economy is actually booming, and it has been booming for the last couple of years. Now, to be fair, some of that is just rebound from the pandemic, normal economic activity. But some of it also makes perfect sense. People were, not in every state, but across the world, here in America as well, many people, even if they weren't on lockdown or those kind of things, people just were uncertain of what the future held. So they didn't spend money. So they put off the car purchase, the home purchase, the washer and dryer, the whatever. People weren't buying that stuff. And if they were buying it, again, a lot of things were out of stock because of the issues with the logistics. All of the ships sitting offshore and all that garbage. Now, pretty much everything you want is available. And interestingly, again, one of the other things with gold and silver is you've heard so many times about how you're not going to get your hands on it. There's a shortage, blah, blah. No. That is pure BS. The bottom line was, at the end of the day, even during the heart of the pandemic, while the ships were sitting offshore and blah, 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 you could have whatever you wanted in bullion. There was no shortage, which tells me that, A, there's an ample supply, but B, the demand for physical bullion just really isn't that big a deal. Now, you could say, certain things like Eagles, they're hard to come by, they had high premiums, whatever. Okay, but the bottom line is you could get your hands on silver, couldn't you? Yes, that is important to know. Now, moving forward, again, the reason that I say that, this whole situation's very, very bullish for the stock market, because again, a lot of people, not institutions, people are going to get caught on the sideline with the market, because what happened last year was you saw a big move in the markets, the stock market, to the downside, which in hindsight, pretty normal market downturn, not anything, not anything incredible or really notable about it. Normal market downturn, went down, came, back up within 18 months to 2 years, which is normal market behavior. But obviously when we were going through it, it felt like every month was just pure uncertainty. We had the war, we had the inflation, we had the Fed just, holding everybody by the junk, and, every month to see whether they were going to raise the Fed funds rate. Okay, all of that's pretty much done. The Fed, could they raise prices, the Fed funds rate again? Yeah, they could. But even the 2 rate hikes that they said they were going to do by year end, they've only done 1, and they might not even do the second one. We might be completely done. What does that mean? Well, okay, what is that? That means nothing to me, Chris. Tell me what that means. Okay, here's what it means. It means that a lot of money last year when the market was falling came out of the stock market to go to fixed instruments, CDs, treasuries, money markets, cash in the bank, whatever. Went to those instruments. Gold, that's another one. Gold. Why gold? Because central banks use it as basically another parking spot when rates are going up. Why? Because you don't want to be holding treasuries, which are the new gold, like it or not. US treasuries are the new gold. You don't want to be holding treasuries in a rising interest rate environment, because what it does is loses you money if you liquidate early. Anyway, the market. What does it mean? All of this money that's sitting on the sidelines, the market, again, the stock market has rallied back. It is within probably a week, 2 weeks of being at the all-time highs if it keeps doing what it's doing. Actually, I mean, it's literally within a day and a half of the all-time highs, to be honest, if they had a big move. But let's just say it keeps doing what it's doing. It is right in the threshold of being right back at the peak of the market, which is going to surprise a lot of people, mainly individuals. So what's going to happen is, as that happens, when people hear that the stock market's at all-time highs again, they're going to be mad. At the beginning, it's going to be a hated rally, because people are going to sit there and say, I heard the economy's bad and it's going to crash, and no. Uninformed, misinformed people. Bottom line, uninformed, misinformed. The market does not reflect economic activity, at least currently. I mean, there in an ancillary way it may, but monetary policy drives the market. Let's be honest with each other. But secondly, moving forward, all of that money that's been sitting on the sidelines, once that happens, people are going to be caught off guard, and that money's going to flow right back into the market. It's going to take some time, but it will happen, especially as interest rates drop, because it becomes less and less attractive to hold on to fixed income or, cash instruments, that kind of thing. Basically, you're not earning the same yield anymore, but with the inflation, you're losing even more purchasing power. So where are you going to go? You're going to go to the market, just like everyone else. Okay, common, normal stuff. But when you look at gold and silver, obviously this has been a nice run in price back up, right? Here's the mistake I made. My stack is all nicer stuff now at this point. I have some regular bullion, I have bars, I have things, but even those are on the nicer end of the spectrum. 100-ounce bars that are like a Royal Canadian Mint, Perth, that kind of stuff. What I should have done is just got the cheapest bar that I could have. Now, again, you're going to hear things like gold is gold, silver is silver. Yes, it is. But especially in this environment, you want to get back that premium that you paid. Now, with prices being what they are, it's getting there where I would still make a healthy profit off of, whatever I sell. But the bottom line is, longer term, do I really want to do that? That is the question. So moving forward, my big thing is I want to take advantage of the price environment to potentially liquidate and, buy back in once this price comes back down. But the question is, I don't have the crystal ball to know when that's going to happen, so it's like, do I really want to go through the ups and downs to, to sell and then have to figure out what I'm going to buy on the back end to make a few dollars? Maybe not even worth it. I mean, realistically, in my opinion, again, most of this stuff is not as great as an investment. Store value, yes, there's definitely value there. But that's the thing, is moving forward, what's that going to look like? These are all the things that you want to be contemplating now. Because again, just like with the market, most people out there probably think the stock market's, 20-30% below its high, because they have no idea what goes on. Just like everything else, they're just completely misinformed and in their own world, which makes sense, right? We all get caught up in, the day-to-day. The thing is, if you're doing this kind of thing to improve your financial situation, you have to stay on top of it. Regardless of, what you hear or things like that, you have to understand the bigger mechanisms at play. That's my job.